Thank you very much for having me here at the EPIC Summit, which is a great opportunity to present one of our latest research projects. And what I'm going to show you today is actually joint work with a couple of friends and other researchers from the University of Regensburg, in particular, Gregor Dorfleitner and Julia Kreppmeier. So what we have done was actually a joint endeavor. So what I'm going to show you today is actually three parts. First, I would like to give you a short intro about the German FinTech market. Then I will tell you a bit about the development of data privacy in the FinTech market in Germany. And then I will tell you about the effects the GDPR had on the FinTech market. So let me start with a brief overview of the German FinTech market and how it developed over the last years. And in order to do so, we first need to define what FinTech actually is. And I think people have very different things in mind if they think about FinTech. So first of all, the Bank for International Settlement has come up with a definition of FinTech, which is by now widely used. And what the Bank for International Settlements thinks about FinTech is that it is a technology-enabled financial innovation that could result in new business models, application, processes, or products with an associated material effect on financial markets and institutions in the provision of financial services. So that's a very long definition, and you don't need to comprehend it in full. But I think what it tells you and what is important is that FinTech is not an idea of only startup companies. And a lot of people think that FinTech is only about startup firms, but that's not the case. I mean, nowadays we all think about the big tech companies that are also developing FinTech solutions, but at the time that was quite crucial. So if you think about FinTech, actually FinTech comes along the way of the traditional value chain of a universal bank. So you have solutions in FinTech that have to do with financing. You mostly think about crowdfunding or credit and factoring solutions with online factoring and overnight credits, which you can get on your smartphone, for example. You have traditional asset management startup firms, for instance, in social trading, where you can follow someone, a leader that gives a signal whether you should invest in a certain stock or not, or portfolio or not. Robo-advice with the idea that you can actually have potentially artificial intelligence, but some other clever form of putting together a portfolio. Personal financial management startups that help you to get an overview of all the accounts and different contracts you have in different institutions. And actually, as you probably all know, that has now been implemented with traditional banks as well. So that's no longer a phenomenon. It only takes place with startup firms. Investment in banking, I need to explain a bit shortly, because that means that we have big FinTech companies in Germany that help you to transfer your bank deposits to banks abroad. And in order to earn a higher interest rate, not only 0.001%, but something like 0.7 or 1% of interest in other countries within the European Union. Then we have a lot of payment FinTechs. Payment is also a classical value component of a bank, which are alternative payment methods. You probably all know that you now can, have a little gadget on your smartphone and then enable it to process payment services. There are all these crypto and blockchain technology companies. And finally, there are a lot of other FinTechs, for instance, all the insurtechs. There are a lot of comparison sites. If you think about Check24 in Germany, they also have a bank license by now, and they provide financial services. Others only have payment licenses and provide payment services. There are a lot of infrastructure companies that help you in the back end. Think about, for instance, or identification services that enable customers to get a bank account online and without the need to actually go to a bank and so on. For instance, and then finally for the crowdfunding stuff, there's all different forms from donation-based until real and annuity credits you can obtain via crowdfunding. Okay, so that gives you a brief overview. If you look at the market, you can see that these are the foundings of these companies. You see that the diverse mix, which we have put together in other FinTechs, is the largest market segment. Then you have insurtechs, which are ahead of the line. And infrastructure, technology, and so on is pretty popular. Payments as well in terms of startups that have been established. But if you put it together, all the financing fintechs probably have the largest market segment in terms of startups that have been founded. But at the same time, they don't make up the largest market volume. So the largest market volume truly in Germany comes from the deposit trading and deposit brokerage, meaning that individuals take their deposits from German banks and broker them to a Greek or a Portuguese bank and try to get a higher interest over there. If you look at the market growth, and here we only have the market segments financing and asset management, we are in 2020 at around 70 billion. The market has been growing by 100% compounded annual growth rate over the years. And actually what you notice is this went along the line with the GDPR becoming binding, which was in May 2018. Apparently there is no much peer in a sense that the market didn't continue to grow. So we don't know what would have happened ceteris paribus, in a sense that if there was no GDPR, would the market have developed differently? But it looks like there is pretty linear growth over the last years. Okay, so since I couldn't say much about payments, it's very difficult to get payment data in a sense that you really know how big the transaction volumes are over the entire market on a transaction-based scale. But what you can see is that Corona has been a driver of this market segment, in particular among the older people. And I don't mean that 50 to 60 year-old people are old, but I'm only saying that they are comparable to the young people. Now deliberately refraining from making cash payments. So people from 50 to 60 are really among the forefront to using cashless payments. And so that was quite interesting, in this market segment, without doubt, has been growing over the last decade, I would say. So let's move into the data privacy issues of FinTech. So just to give you an example, so people are not really eager to have their data protected if you talk about individuals. And here's only one example. Venmo, which is a payment service in the US, which is very, very popular over there. And what you can see, there's this website Wismo, and Wismo scrapes the data from Venmo. Venmo allows you by default to have this little social media tags for your payments. And if you don't switch off the default, then Wismo is capable of scraping that. And you can see that people here are telling you, for instance, Lizzie paid May for drugs, and then there's a little mushroom, and then you have the weed and the good stuff and so on. And so apparently Wismo is capable to scrape that and also realize that the good stuff might have something to do with booze or drugs or something like that. And if you look at the fintechs in Germany, well, they're GDPR compliant. There have been a couple of media news about that. For instance, N26 has been in the media very often for possibly holding a blacklist of former customers, and the data privacy officer has stepped in here of the respective country. And then you see, for instance, in other cases, Scalable Capital, there were the data of 31,000 clients at risk for cybersecurity risk. And so different reasons why fintechs have or have not been GDPR compliant in Germany. We wanted to look at this a bit more systematically. So what we did was we looked at the privacy statements or privacy policies of these companies. And of course, companies are not required by law to have such a privacy statement, but most of them comply with the requirement to inform their users by publishing a statement, because it's much easier and than informing everyone individually. So you can actually look at the privacy statements, and the companies should also not publish untrue information in these privacy statements, because that would be potentially illegal. So what we did was we collected the data before the GDPR became binding in 2017. And then we realized, well, our data is outdated. This is terrible. So we did it again in 2018. And we just wanted to check whether there are any differences in the privacy statements. And what you have seen is that a couple of companies went dark, so they don't have a website anymore. Before the GDPR, this were 65 and afterwards 94. But more importantly, what you see is that before the GDPR became binding, we had 65 companies not having a privacy statement. But thereafter, a lot more companies had a privacy statement. Only 41 didn't have a privacy statement. So overall, we can analyze data on 370 privacy statements from different fintech companies from all the domains I showed you. And what we found is, first of all, that the privacy statements have become much longer. So before they had 5 pages, now they have 11. Before they had 1,800 words, now they have 4,100 on average. And before it took you 7 minutes to read it, and now you need on average 17 minutes to read it, which is not too bad, but obviously that is only an average. So for some privacy statements, you would need an hour to read it if you're an average reader. So we checked for the different articles of the GDPR and whether companies have been compliant. For instance, the right of access by this data subject requires you to tell whether personal data is processed, and most of the companies told in their privacy statement that this data is processed. Only 7 companies didn't have any information on that fact. And then if you looked at whether they report exhaustively what personal data they are processing, then you see that only around 1/4 actually published an exhaustive list of the data that is processed. And the majority of 260 FinTechs didn't tell exhaustively which data they are processing. So they gave examples or said that like certain categories of data are processed, but it didn't tell the customers precisely. If you want to know what kind of data this is, and if you cannot read it, I can always send you the slides. Happy to do so. Then you see the data they are reporting to process are not that fancy. So most state that they are processing the email address, first and last name, the address, mobile phone number, and so on. But interestingly, around 1/3 of the companies are stating that they process the IP address. And then if you go down the line, you will also see that they are processing GPS data and location data. Which I'm not judging because it might be valuable to do so, in particular for fraud prevention, that might be a good thing. Then we also looked at the more sensitive data, and what you see is that the fintech companies process nationality, citizenship, user pictures, and so on. They also conduct conversational recordings in order to re-identify customers. And then you also see they collect data and process it on religious confessions, which was pretty interesting because this was, for instance, a crowdfunding company which didn't engage in Islamic finance or anything like that. And there was actually no need to collect the data on a religious confession of these customers. And they still did it. And they also reported it in the privacy statement. Then we checked what the reasons were for processing the data, and most of them said, like, we have to do it for contractual purposes and to deliver the service to the customer. But others also often argued that, they want to engage in user profiling and improve the offer, which was interesting for us because the main reason why we collected the data was because we wanted to know whether these companies develop innovative products and they use the data in order to engage in AI techniques or other stuff and to make something really cool out of this. But we couldn't really find any information about this in the privacy statements. We checked whether the data is processed anonymously or pseudonymized. So what we see is that there is no information about this in most of the privacy statements. Only very rarely, in 9 and 16 cases, companies actually said that they anonymize or pseudonymize the data of their customers. Then we checked whether data is shared with third parties. That is most often the case, and companies report this. There are some companies, only 14, which explicitly stated that they're not sharing any customer data with third parties, and 36 companies didn't say anything at all about it. And then interestingly, if you check in the privacy statements what personal data is shared, that is hard to find out. So only 25 companies told their customers in full what data is shared. 100 did give you examples, but most of the companies only said that they would share data, but they didn't tell you which data that is. So if they told you which data it is, in those cases, it was mostly the name, email address, bank account number, and so on. But you can also see that a couple of companies share the IP addresses and even GPS data, so meaning that, other companies will be informed without your notice where you're actually heading to. Then we checked for what purpose the data is shared, and you can see that most often it was again contractual fulfillments, processing, and so on, which makes perfectly sense. Only very few companies said that they want to actually change their corporate structure or optimize the business ideas, and that was what we were interested in. So we thought that a lot of companies would use AI and data in order to improve their products, but that was not what they told us. Or what their privacy statements told us. So most of the time they only said that they do it to fulfill the contract, but not to improve their product. So then the question is, to which third parties did companies share their data? And here again, the minority of firms told exhaustively to whom they are sharing the data. A couple of companies gave you a not exhaustive list. So they said, for example, we share it with Shufa or any other company, but they wouldn't tell you what these companies are. The absolute majority of 245 didn't provide any information about to whom they are sharing the data. And most often what they said was that they will share the personal data of you or of users only in exceptional circumstances, or if a law enforcement authority requests them to do so. So then we also checked for other data, whether there is behavioral data and movement data and so on that is being processed. And what we found that almost all FinTechs have processed this data. And then the question was, what could they really do out of this? And so we asked 38 CEOs and experts from the field from most of these companies. And what they said was most of the time they use the data in order to engage in customer targeting. But remember, it's 38, so it's not even half of them telling you that that would be the reason. Some told landing, marketing, and so on. And but you see, they don't really give you an answer to how they use the data. And then we asked them what they understand by customer targeting and so on. So they know that pretty well. And if it comes to lending, so that would, for instance, be in order to create a credit score or to score the customer in some way, which probably makes sense for these companies because that's how they actually can conduct their business. So what we then did, we asked the CEOs what they think is a limitation for FinTechs in terms of big data analysis. And so the majority of them said, well, actually, the law is the problem. So 31 out of 38 said legal requirements are problematic. 4 only said, no, that's not a problem. 3 didn't answer this question. And if you look at economic problems to engage in big data analytics, you see that they are equal off and saying that's a problem or that's not a problem. Of course, we were interested in to learn more about what the true problem is. And then you see they couldn't really answer what the legal problem is. They mostly said it's high IT costs or compulsory approvals. The customers wouldn't do that. But in the end, they couldn't really tell you what the problem is. So apparently it looks like my friend and co-author says, big data is like teenage sex. Everyone talks about it. Nobody really knows how to do it. Everyone thinks everyone else is doing it. So everyone claims they are doing it, but it's not really taking place. So last third of my presentation, data privacy of the GDPR. So did the GDPR do anything good in terms of data privacy? And you all know that the GDPR has this requirement for a clear and plain language. So information should be provided in that way. And this corresponds to the technical or linguistic concept of readability, which you can actually conceptualize in terms of the so-called Wiener Sachtextformel or the SMOG metric. And that's what we did. And what we find is that the readability of the privacy statement has actually worsened after the GDPR became binding. And here is the statistics on that. So you can see that the 2 metrics we have applied all increase in their value. And this is statistically significant. That's what you see in the end, which means that there's a true difference between the 2 values. And if you're a statistician, then you can also look at this graphically, and then you will see that the values, I'm not sure you can see this properly, but the 2018 value moves to the right for all these metrics, also in terms of the length of the words. And then you see that the readability of the GDPR actually became less good. The second thing we were interested in is whether the texts have become more standardized and whether we can prove whether that's the case or not. So the core standardization is on the one hand cost efficient, but on the other hand, it's also less informative and then referred as a boilerplate. And as you probably can imagine, if you have a more standardized text, then there is less information about company-specific information. And for that reason, the customers can actually learn more about less about the company. And this you can conceptualize in terms of the so-called cosine and Jacquard similarity and Euclidean and Manhattan distance. So if you had a statistics course, you probably came across that. And what we find is that the standardization has increased since the GDPR became binding on all four of these metrics. So the similarity metrics have increased, the distance metrics have decreased. They're all statistically different from another. And that means actually that there is a problem apparently. You can also show this graphically like before, you will find the same result. So another finding or another thing we were interested in, whether we could find out whether more or less data is processed and whether companies became more transparent about it. And there is Article 5 of the GDPR stating that there is a data minimization principle. And what we find is that we have generated here two indices. One is the number of data points the companies are processing. So the more data they are processing according to their privacy statement, which is generated by an index. And then the transparency index, which is an index summing up to 8, whether, for example, the company tells you what data is processed, whether this data is transferred to other companies, what the purpose is of the storage and the processing, and whether they tell you how long they will store it, for example. And so we build an index out of this. And what we find is that the quantity of data processed according to the privacy statement has increased since the GDPR became binding. And we didn't see any change in the transparency. Again, that we can see here, the data index we have generated has increased, more data is processed, statistically significant. And the transparency index tells you that there is a decline in transparency. However, that's not statistically significant. So it's probably not true in the population. So additional findings, we find that external investors had a positive effect on the data processing and transparency, but only before the GDPR became binding. There's no effect for bank cooperation. So if banks cooperate with FinTechs, that didn't have an effect on data processing or transparency. The legal capital of a company, so the Mindestkapital, as to say, had an effect, meaning that if a founder was more inclined and dedicated to their business by putting more money down, that has a positive effect on privacy compliance. And we also observed that FinTechs mimic the privacy statements of their industry peers. That is what they have observed before, they now do. In terms of litigation, we have observed that N26, apparently, as I showed you before, had this blacklist of ex-customers and was supposed to pay a fine of 50,000 euros. Germany has a high number of individual data-related damage claims, more than 20 cases heard since 2018. But here the fines are quite low, between 5,000 euros, but usually not more, if there was a breach of data subjects' access right, for instance, by not providing the information to users they requested to obtain. So to sum this up, what did we find? So users sometimes behave very irresponsible in a sense like with Weismo, where they by default give up a lot of data and companies are not supportive here in some cases. The GDPR became binding, but it wasn't really helpful for the user, I would say, because most of the fintech companies, at least, engaged in legal safeguarding by generating boilerplate privacy statements, which are often to the detriment of the user. That is, they became longer, they are more standardized and less focused on the specific company and what data they are processing. They are often less readable and they often mimic the behavior of others. So there is a tendency to all the companies having very similar statements. And finally, there's also very little penalties at the moment. So the 50,000 that N26 was supposed to pay, but for individual users, and that could be very small startup companies, the fines have so far been low. So if that was too much information for you and you're still looking for a Christmas present, feel free to get one of the books. And I'm also happy to share the slides with you if you're interested.